Monday, November 11th, 2019, Maneco 64, home of alternative economics and contrarian views. Today I want to talk about the commodities to equities ratio to show you how undervalued commodities are, and that includes precious metals. Before I look into that, of course, I'm going to look at what's going on this morning in the markets and out in the world. Look at some of the headlines. It's just gone past 7:30 a.m. London, right? So one of the interesting things I'm seeing this morning is here on investing.com. The headline is Asian shares a sea of red as Hong Kong chaos hits sentiment. What's happening in Hong Kong? Well, you still have the protests in Hong Kong. Headline on Zero Hedge here saying, caught on video, Hong Kong protester shot by police during morning clashes. Hang Seng tumbles. That's the Hang Seng index, of course. You've got other news elsewhere, halfway around the world. Bolivia, chaos in Bolivia after President Morales resigns, claims he was a victim of a coup. He was a leftist president, of course. I'm not going to focus on the left to right paradigm, just on the uncertainty around the world. We've got protests in Chile as well, in France, in Spain, in Barcelona, Hong Kong, everywhere, right? There is something wrong out there. So a lot of instability, right? And I think the globalists, they like instability, right? It keeps them in charge. They don't want a prosperous and peaceful world. So let's have a look at what the Asian stock markets are doing. Shanghai is down 1.8%. The SZSE component index in China is down over 2%. China A50 is down 1.6%. And the Hang Seng index is down about 800 points or 2.8%. I remember when I used to work as a futures and options broker, used to do a lot of Hang Seng futures for my clients. Even though the core of my business was government bond futures, some of the funds I used to talk to in Italy, they used to do all asset classes, and they used to do a lot of index futures to hedge their underlying equity positions, right? So anyway, let's look at where we are in terms of the other markets here, precious metals in the stock market. We've got spot gold, 1464.70. We're up about $6 this morning, up 0.4%. Range has been 1458.50 to 1465. So we're near the highs of the day so far. Silver, 1689, up about 10 cents, still below 17. That's the next target. Range has been 1675 to 1692. So the Dow is down 128 points, just under 0.5%, 27,544. S&P down 13, 0.5% as well, 3,079. High has been 3,093. Some people think 3,100 will be a key resistance. I think last week the all-time intraday high was just under that level, like 30.98 or thereabouts. NASDAQ 100 future down 35, 82.18. That's 0.5% as well. Sterling is up 0.25%, 128.06. There was news on Friday that Moody's had put UK credit on negative watch. You would expect the pound to be lower, but maybe there were some rumors and the pound dropped on the rumors, and as usual they bought the news, right? This is a key support area here for the pound, this 28 area, I would say. Not short term, but more longer term. The euro is unchanged, 110.28. The dollar is down 1/3% against the yen, 108.97. And the dollar's back up above 7 versus the Chinese currency at 700.78, up 1/3%. Crude oil is down. WTI is down 1% at 56.66. Brent is down 1% as well at 61.53. So it looks like those two asset classes, energy and the stock market, are kind of linked at the moment. In the past, many years ago, it used to be that if oil prices went up, the stock market went down. Now it seems they go up together and down together, which is strange. I guess it's because of all the easy money that's been pumped into the shale oil sector, I guess. And a lot of the Wall Street banks, I think, are heavily exposed to that sector. So I think that's why this is happening here. So what about the bond market? Yeah, yields have backed up quite a bit. Some think that's why gold has come down. Maybe because yields have gone up almost back up to 2% in the 10-year. Right now, we're up 1 basis point at 195. I think the high on Friday was 198. That's a problem. I even saw that JP Morgan is questioning this. What's going to happen if yields go up too much? Is that going to bring down the stock market? Or is the Fed going to do even more QE? I think they're going to do more QE. That balance sheet is really bouncing back up. The other day, there was an article about how it's the biggest move in the balance sheet in about 6 years, right? So that's where the markets are. Cryptocurrencies this morning have come off. Bitcoin had gotten up back above 9,000. It's now 8,800, so it's down just over 2%. The commodities to equities ratio. The other day, I saw a tweet by Tavi Costa or Otavio Costa. I think he's also originally from Brazil, like me. I follow him on Twitter, and this is what he tweeted. It says, enough is enough, right? Fresh 50-year low in the commodities to equities ratio. The next monetary and fiscal experiments will come at a cost. Major cyclical turn in this ratio likely ahead. Yeah, as you can see there, how far down this ratio is. So this is the Goldman Sachs Commodities Index total return divided by the S&P 500. You can see how that ratio is like down to the floor, right? It hasn't been, I think it looks like it's the lowest ever, like you said, in 50 years, even lower than when you had the tech bubble burst. That's when gold was around 250, right? Around that 99 to 2001 time zone. Of course, gold went up to 1921 from that low in 2011, right? 2001 to 2011. Now gold is almost 1,500. Where could gold go if this ratio switches around and starts zooming higher, right? It's very interesting. And the other ratio that's interesting to look at, of course, is the Dow Gold ratio, which is still, compared to where we were in 2000, around 46. Gold is still outperforming equities, right? Since then, in the 21st century. I said earlier in the video that precious metals are commodities. You might say, oh, I've heard you say that gold and silver are money. Yes, they're money as well. And they're commodity money, right? Gold is the most marketable commodity, and that's why it's money. I've had a comment recently from one of the viewers. Warren Buffett says gold is useless, and that's true. It's useless. That's why it's money. A Federal Reserve note or a Bank of England note are useless as well. They're just money, right? And that's what money is. Money is not consumed. Money is exchanged and spent, but it's always there. And that's why gold is money. That's why oil is not money, really, because oil, you consume it, right? That's why Oranges are not money because you consume it. Granted, things can become money under extreme circumstances, like just in the aftermath of World War II, for example, in Germany, there are stories of people using cigarettes as money, right? And you do smoke the cigarette, you consume the cigarette. Yes, there are extreme examples of that, but in general, yes, money doesn't have any other use than being money, and that's maybe Warren Buffett is being. I don't know if he understands that. I think he does. I'm not sure what his goals are. He's a clever guy, and his father used to be someone who understood these things. Howard Buffett, right, wrote that article in 1948 about how gold is so important to keeping a society free, to keeping free markets, and to keeping a check on the size of government, right? With fiat currency, it's a lot easier for government to spend. Under a gold standard, much harder, right? Because there's a finite amount of gold out there, and it's very hard to come by. Central banks and banks cannot conjure up gold out of thin air. So there you go. How long could this commodities to equities ratio stay down here? It could stay down here for longer, right? Lord Keynes, John Maynard Keynes, one thing he said that I agree with is markets can remain irrational for longer than you can remain solvent. So yeah, we could go even lower. We could stay there for even longer. But I would say that the probability, the chances are that we are very near a low here. So what would that mean? That would mean that commodities are due to outperform the paper markets very soon, in my opinion. We've had, 11 years of central banks pumping credit or money created out of thin air by themselves into the financial system, going into paper assets. Things will have to rebalance. That's just how nature and markets work. Markets are part of nature. We are part of nature, right? Things cannot keep going on forever. They have to reverse. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Make sure you hit that little notification bell above as well to be notified of all my new videos. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.